Welcome Masterclass students, monthly service members and the CTKS family to the CTKS Market Pulse, your daily run-through of how the markets are moving from different perspectives. We'll cover off stocks, crypto, gold, yields, forex and more in this daily briefing to get you prepared so that you can transform fear into courage to be more of a financial blessing to yourself and those you love. Let's run the numbers. When looking at the crypto market, we can see it's been doing really well. On news of the SEC dropping their personal case against XRP executives, we've seen a broad-based rally across the crypto space. That rally is really justified. The SEC has been suppressing crypto's price for quite some time. Gary Gensler, chair of the SEC, has said on more than one occasion that crypto is a pretty bad place to be. The SEC is racking up a string of losses in court. Soon, the Bitcoin spot ETFs will need to be approved as well. The crypto market is cheering because the narrative is changing in the US. Unfortunately, so many people don't understand that crypto is simply the Internet of Money, Web 3.0. The internet has evolved from reading and writing information to reading and writing not just information but digital transfers of money as well. When the internet was released, the government did try to stop it because it put the postal services under pressure. Crypto puts the banks under pressure. The banks are really important economically. They help the government to implement monetary policy. This implementation is what politicians are worried about. Crypto represents a leakage from the financial system. The financial system is based mainly on the generation of money from thin air, according to the banking system's credit creation multiplier effect. Just a couple of things to keep in mind. The global real estate market is worth an estimated $326 trillion in 2022. According to Credit Suisse, total global household wealth tallied about $463 trillion. They're pretty big figures, but when you think about the coins and banknotes circulating around the entire world, that's around $8 trillion. You can see that there's simply not enough money in the system if people wanted to withdraw and cash out their assets and say, hey, I want my money. There just isn't any. This is why globally, governments are implementing central bank digital currencies, or CBDCs. They need to turn the money printer off and the numbers from 0 to 1. In that way, the banks can't have any bank runs because it's all digital. Problem solved. Inside the stock market, we do fundamental analysis. We need to know how earnings are growing, how market capitalization is calculated, and a lot of different things. But with crypto, we need to understand the major winds of change. In the last trading session across the main markets were not happy. Members of the monthly service, it's really important that you track the different charts and especially you track the idea of incoming fresh air gaps to the upside or to the downside. However, crypto has done very well because it's hit an adoption phase, It's a critical path change because the SEC is losing face. The SEC is losing its court cases. It may win a couple of smaller ones, but the big ones are the ones that count. Each and every day we get more and more crypto news. Crypto is being adopted globally. Right now, inside the economic system, the US 2-year yield, the US 10-year yield is absolutely wreaking havoc across the stock market. Crypto is being viewed as a flight to safety as the risks increase in terms of the banking system. When yields spike, that's really bad for the banks. And when we look at the November meeting, we can see the probability of a rate hike is 0%. It was a positive percentage a couple of days ago. Yesterday it was 0 as well, but that did fluctuate throughout the day. There is a 96.2% chance or probability of no change in the federal funds rate, which is between 525 and 550 basis points. We can see the stock market came down 1.26%. All the sectors were red. The stock market's fear index took another hit, but it's not come back to extreme fear where we were on October the 3rd. We're still in fear, and when we look at this particular recovery, it's likely that we're hammering out a higher low. Anything can happen, of course, in the stock market, but the US government especially doesn't want the stock market to crater. It can't afford it to do so. It's literally funding two wars, and it could have another one on the horizon. That means if the stock market craters, the ability and capability of the US government to fund anything will be put at risk. That's why you're seeing the probability of a federal funds rate increase dropping to 0%. These are political moves. We know that the markets move between CTKS structural levels, and they always move in a wave. They're testing resistance, they're testing support, and so on and so forth. If they get above a resistance level and turn it to support, they go to the next resistance level. If they drop through support, they're going to the next support downwards. Your tier ones are your guide, they're your roadmap, they're your security blanket. Understanding where the CTKS structure is inside those charts is vitally important. When we look at the S&P 500, normally people draw up support and resistance lines from recent indicative price, but the S&P 500 has been around from 1871. That's a long time. You can see these particular numbers here. These are structural levels of support and resistance, and you get them from the indicator. What can we see? We see that the markets just didn't hold this 42.75 mark. If it's not going above, where's it going? It's going below to that 42.16 mark, but it hasn't hit it yet. There's a confluence of structural support between 41.61 and 41.92. If the S&P continues to come down, we would expect it to get caught in that range. These are total market structural levels. They're very different from anything that you'll see anywhere else. To do this yourself, you can do Level 1 and Level 2 CTKS Method Standards Certification. Yesterday, we talked about Tesla coming into a pretty nasty negative air gap between 197 and 213. Tesla is hovering around the very edge of that at the moment. We could see Tesla do a pretty deep dive because there's no structural support in there to hold its price. When we look at the NASDAQ, the thing that you need to keep your eye on, if you turn on the indicator, I'm just drawing SCs or Stanfield zones around these particular structural resistance areas. There's a lot of structural resistance between 13,098 and 13,262. We've seen that the NASDAQ has come down and actually passed through that particular structural support, and it's looking a little bit weak at the current time. Monthly service members, make sure that you zoom out and you contextualize where the SLs are. Knowing where support and resistances are, their levels, is incredibly important. And of course, we're talking about structural levels here, not just any support and resistance level. From 1967, the DXY has been trading, and we'll see just in a few minutes how important the DXY is to crypto. When we pop on the DXY indicator, and if you're doing anything inside Forex, you must know and understand the DXY structural levels. It doesn't matter what pair you're trading, you must understand the DXY. It's the one that controls them all. We can see the current price is 106.1630. What we understand with a structural level, if it's not going below, it's going to the next structural level. If it can get above, it's going to the next one. If it doesn't make it, it's coming back to the one below. What are we seeing here? We're seeing a bit of a crossover in the DXY. We may see the DXY start to come up and challenge this 106.2432 level. With three-dimensional risk management, we're always prepared for any eventuality in price because we know that the structural levels contain price. These are our guide rails for the roller coaster that is market price. The DXY is really vital to understand because it impacts so many different markets. I've inverted the DXY here, or the inverse DXY. What can we see? As the inverted DXY is coming up, what's happening to Bitcoin and total crypto market cap? They're moving with it. The S&P 500 futures is moving in the other direction. The market has been spooked about the yields just skyrocketing. Skyrocketing yields put the banking system under pressure and could cause the banking system to buckle. Of course, politically, they can't afford to do this. So what are we seeing? Just exactly what we said yesterday. We're seeing the yields start to come down. We've seen the same sort of behavior in the US 10-year yield. In fact, the US 10-year has been stronger in terms of price appreciation than the 2-year. And when we look at what's happening now, we can see that the US 10-year yield is starting to come down, but we need to know the structural levels. Zooming into price, we need to know if there's any structure to hold the US 10-year yield up, if there's massive resistance pushing it down, and we need to mark up the chart since 1912. And fortunately, the indicator has all of that combined wisdom inside it. We can see that there's a lot of structural resistance up around that 5.05% level. We are being supported with price, but it's not managing to get through this fresh air gap. Why is that? Because fundamental factors drive price as well. If the federal funds rate is not increasing, that will be negative pressure on the yields. The one thing that we don't like is at that 4.9% level, there's a strong structural support area. Service members, if you look at the US 2-year yield with the indicator on, you'll notice a confluence of structural support areas below the US 2-year as well. On geopolitical concern and the war from Hamas and Israel, gold has been having an absolute field day. Gold loves bad news. This chart of gold dates all the way back to 1833. Where are the structural, the total market structure levels, or CTKS structure? What we can see is they're right here. We can see these different values on the lines. If it's not going above, it's going below. And having an understanding as to where the roller coaster rails on price charts are is incredibly valuable. There's a lot of memes out there that say, hang on for dear life. You're riding the roller coaster of price, and it is because it bounds between structural level and structural level. If it gets above, it's going to the next one. If it can't get above, it's going to the one below. But if it does, it goes higher. But if it can't get above, it's going to the one below, and so on and so forth. The key to understand that gold's price currently at 1980 must overcome this key structural level at 1985. A lot of people think gold is heading to a round number at 2000. Let's have a look how it's playing out. It's actually 2001. Retail users round numbers. Professionals use the actual number. The numbers that I represent on the chart are just here for your viewing pleasure, but the truth is the lines are 100% accurate. Knowing where the CTKS structure is inside any particular price chart is a game changer, no doubt. When we look at Apple, and Apple was marked up since 1980 with the CTKS method, I've just drawn Stanfield zones or SCs around the different structural levels here and just shaded them so you can see it more clearly. But the concept is Apple had some very, very serious smart money resistance levels between 178 and 181. So far, it's not been able to get through that resistance level. And pretty much no wonder, with the yield spiking all over the place, we would expect that Apple and the stock market would come down. But that's going to change around soon. The concept is that if we look a little bit lower, around that 171, 172 mark, there's a very strong structural support that's caught price in the past and rebounded it back to that upper level in the past as well. So just bear this one in mind. Knowing where these fresh air gaps are is very important, and Tales from the Man Cave said, I'm going to try and pick up some more Tesla if that air gap is filled. Well done, my friend. Inside the CTKS Masterclass, we've got so many different rules, and Rule 252 is very important for everyone right now. prepared and not scared. A lot of people talk about buying the bottom, but when the markets go red, they run, and they run like hell, and they get really angry. It's really understandable, but the concept is professionals, while everybody is running out of the burning building, professionals are running in. They want those areas of deep value, just what Tales from the Man Cave said, and many others inside our community. We know the price is always moving in a wave. It's always going up and down, and that is Rule 4, a very, very powerful rule. Bitcoin has been trading since 2009. If you were to draw support and resistance levels up from just recent indicative price, say the past year, you're missing a lot of data. Support and resistance lines need to be statistically significant. That's where the CTKS method shines. It was invented by a statistician with more than 30 years, well, nearly 40 years experience inside financial markets, so that you can see where smart money is buying and selling. And if we look at Bitcoin, what do we see? The structural levels. If I was to pop on the indicator from the monthly service, you would see that there's a structural resistance level at 30,219 that was just pinged by Bitcoin. Structure. There's another structural level, and this is currently resistance at 29,731. If we look at what Bitcoin has done in the past 24 hours, it's absolutely staggering. It's come through so much smart money resistance from 28,581 to 29,322. Many thanks to everybody for their very fantastic comments in yesterday's videos and across all of the videos. TF Theta said he picked up on that concept. The problem is with the news, if you watch other influencers and they're not talking about structural levels, I mean total market structure levels, what you're going to find is you're just going to run away from the market. They'll say, oh, the market indices are going to plummet by 50%. So you say, oh, okay, I'll sell everything now and I'll wait to buy back. But the concept is, if you're out of the market, you're out of the market. There's a much better way to do things. Inside the masterclass, we layer down at structural levels. This is a much, much better idea. At least you stay inside the market. The markets can get very, very negative. As they get more and more negative, you want to get more and more positive. Well done to Kacharia. Kacharia said Bitcoin may be rejected once more from that $30,000 level. You were right, my friend. Looking at Bitcoin, the thing that we need to overcome is this particular structural level, and I've popped on the indicator for you at 29,731. If we can overcome that and the bulls take control again, we're headed towards 30,219. If we can't hold the 29,731 level, we're coming down to the 29,306. If you want the indicator, you can go across to CTKSMethod.org, and we're going to have a pre-Halloween special where you can gain access for $49 as opposed to the $99, which is the now current price. I'll leave the link of that particular special in the description of this video. If we look at Solana right now, let's pop on the indicator to see where the structural levels are. The structural resistance at 27.29 has stopped Solana dead in its tracks. We've been supported by this 26.33 mark. Where is price likely to go? Where do you believe? Please let me know in the comments. Price is a really simple animal. If it's not going above, it's going below. And if it gets above, it's going to the next one. If it goes below, it's going to the next one below. Therefore, using your three-dimensional risk management, which direction do you think Solana will head to? The 27 mark or the 26 mark? Maybe put 27 if you think 27, or 26 if you think 26. And of course, when you get the indicator, you can zoom out and see all of the different lines that are relevant to this month. There was fantastic news in XRP yesterday, but what we saw, this 52.90 structural level has been restraining price for some time. Fortunately, there's a very strong structural support level at 5200, and if you have the indicator, you just pop it on and you'll see where these numbers are. We've also got a structural support level at 5105, and that's rebounded price in the past, so that could be one to keep your eye on. Looking at ADA's price chart, please keep in mind that there's quite a confluence of structural resistance levels from 2539 to 2575. These structural levels, especially when they're resistance and they stack together, can cause things like this. The shorts may get liquidated, but they quickly regain control because there's so much resistance. ADA does need to trade above 25.75, but if it does, there's a fresh air gap up to that 26.56, so it could move rather quickly. There's also incredibly strong structural support through this 24.60 mark. ADA is now showing signs that it wants to get into this 25.39 to 25.75 level, and there's going to be a lot of people going short on ADA right there. We could get a massive liquidation spike, and let's just keep our eye on that. That could be really interesting to watch out for. Understanding the CTKS structure on the Tier 1s is absolutely vital, but stacking probabilities inside the Tier 1s but going outside to the Tier 2 and Tier 3 is very important. The more that you put in, the more you will get out. Your learning dictates your earnings. We also need to be very conscious of our mindset. We solve our problems with positive excellence. The main market has gone very red, but crypto has gone quite green. We are seeing gold and Bitcoin, and therefore Bitcoin and the crypto market act as a flight to safety. The stock market could experience some more negative downside. That's why you must know where the structural support and resistance levels are and how strong they are as well. There is a video for each indicator inside the CTKS Method monthly service where I explain how to use it and how to understand it. The service is the practical application of the masterclass. I'll make sure I leave that service discount link inside the description of this video. This is the time to know. Have a great day or night ahead, my friends, and Kate and I will look forward to catching up with you again in the next video. Bye for now.